Managers and investors alike must understand that accounting numbers are the beginning, not the end, of business valuation.
Hi everyone, I'm Yasara Ulfah from Accounting Department, University of North Sumatra. Today, I will discuss about accounting for consignment sale. But on this occasion, I will discuss 5 sections starting from summary and learning objectives, introduction of consignment sales, its characteristic, reason for choosing consignment sales, and method of accounting for consignment sales. First topic is summary of this chapter. So, this chapter will discuss the definition of consignment sales and the parties involved in consignment sales transaction and their characteristic. Furthermore, the discussion regarding the reason for choosing consignment sales for the consignor or consignor, the method of recording consignment from both the consignor and the consignor. Then, the discussion on accounting for consignment transaction closes with the preparation of an income statement. Next is learning objectives. After studying this chapter, students are expected to be able to 1. Understand the meaning of consignment sales and the parties involved in it. 2. Know the reasons consignors and consignees choose to do consignment sales. 3. Record the consignment transaction for consignors using either the separate profit method or the indivisible profit method. 4. Record consignment transaction for consignees, either using a separate profit method or the indivisible profit method. 5. Prepare an income statement for consignment sales. Next topic is introduction to this chapter. Various attempts were made by the company to increase its sales. One form of this effort is by making consignment sales. Lebih 1989 defines consignment sales as a form of sale by the owner's delivery of the goods to another party who acts as a sales agent, while the ownership rights to the goods are still being held by the owner until the goods are sold. The owner who leaves the good is called the consignor, while the party who receives the good deposited is called the consignee or commissioner. So, when the consignment sales process has been running, there will be 3 parties involved, namely the consignee, the consignor, and the buyer. The characteristic of a consignment sale. 1 is property rights. The consignment sale will begin with the physical delivery of the goods by the consignor to the consignee, but will not be followed by the transfer of ownership rights over the goods. Ownership rights will transfer after the consignee has successfully sold it to a third party or buyer. 2. Selling costs. All costs associated with the sale of goods, called consignment goods, are paid by the consignor. These will usually be clearly stated in the contract agreement that has been drawn up by the consignor and consignee. 3. Unsold items. The goods entrusted by the consignee have a curtailed period of time. If the period ends and the goods have not been sold, the goods will be returned to the consignor without charging the consignee. 4. The selling price of the consignment goods. In the consignment agreement, generally the selling price of goods has been predetermined by the consignor, and the consignee may not sell the consignment goods at a price that deviates from the stated price. Last topic is the reason for choosing a consignment sale. First, for consignor, doing consignment sales will clearly affect sales volume as well as expand its marketing. As for other reasons, according to Lebih 1989, namely 1. For certain products such as new products, products that are expensive, products whose price fluctuate greatly are probably the most effective way to market and expand sales. 2. For certain products such as grains, livestock, agricultural products, consignment sales techniques will make it very possible for consignors to get special salespeople who master this field so that they are expected to provide maximum results. 3. The consignor can control the selling price, which might not be possible if sold by other means or techniques. 4. In addition to controlling the selling price, control over the physical quantity of goods can also be carried out by the consignor so that it will make it easier for the consignor to carry out production planning. For the consignee, the consignment sales system will clearly provide benefits in the form of obtaining revenue and the proceeds from consignment sales, namely in the form of commission given for services in marketing consignment goods. In addition, there are other reasons according to Lebih 1989, namely 1. Business people are always happy and willing to act as a consignee in marketing the product, because with this system, the consignee does not bear the risk of loss even if the consignee fails to sell. Consignee is only liable to return unsold consignment goods. 2. Consignees will avoid losses arising from damaged goods, losses due to price fluctuations or expired goods, or goods whose market prices have decreased can be returned to the consignor. 3. Unlike the usual sales system, the consignment sales system does not require consignees to incur sales operations costs, such as advertising costs, salesperson fees, etc. All these costs are paid by the consignor. 4. The consignment does not need to provide working capital to purchase goods to be sold, as well as for other needs related to consigned good. Next, method of accounting consignment sales. There are two accounting methods to choose from, such as 1. Separate profit method. The recording of consignment sales transaction is separated from regular sales transaction so that the profit or loss arising from consignment sales can be known immediately. The steps that must be taken in recording consignor's book are: 1. A separate forecast account is opened under the name Consignment Out, which debits the cost of goods sold and credits the proceeds from the sale. 2. At the end of the period, the profit or loss from the consignment sale transaction is calculated and transferred to the estimated income statement. 3. If the consignment activity is carried out with 2 or more parties, then for each consignment a separate estimate is provided. Next, the steps that must be taken in recording consignee books are: 1. A separate estimate or account is opened, namely the incoming consignment estimated. At this stage, the journal is only recorded memorial because all costs related to transaction that should be on the debt are paid by the consignor. 2. At the end of the consignment period, the amount of commission will be calculated, which will later be transferred to estimated income statement. 3. If the consignment activity is carried out by 2 or more parties, a separate estimate should be provided. So this is the example of the previous method. You can see below, there are 5 transactions that must be recorded. The journals for recording various transactions are: the first is delivery of 10 mobile phones for sale. In consignor's book, the journal is consignments out in debit and consignment and delivery of goods in credit. And consignee's book, the commission will be given 20% of the sales proceeds and all related costs will be borne by the consignor. Second, payment of shipping costs by the consignor. In the consignor book, the journal is consignment out in debit and cash in credit, and in consignee's book, there is no journal. Third, payment of costs when receiving the cell phone by the consignee. In consignor's book, there is no journal, and in consignee's book, the journal is consignment entered in debit and cash in credit. Fourth, sales of 10 cell phones by consignee. In consignor's book, there is no journals, and in consignee's book, the journals are cash in debit and consignment entered in credit, and then consignment entered in debit and commission on consignment in credit. Last, reporting and sending money from sales by consignees to consignor. In consignor book, the journal are cash in debit, consignment out in debit, and the credit is consignment entered, and then consignment out in debit and consignment profit in credit. In consignee's book, the journal is consignment entered in debit and cash in credit. Next, the second method is inseparable profit method. In this method, the recording of consignment transaction is not separated from the recording or ordinary sales transaction, so that the resulting profit or loss cannot be known directly. The steps that must be taken in recording the consignor's book are: 1. All transactions related to consignment sales are recorded like ordinary sales transaction, so that when the goods are sold, they are recorded, including the recording of their costs and related costs. 2. When the goods are sent to the consignee, the consignor only keeps a memorial recording. Next, the steps that must be taken in recording the consignor's book are: first, an estimate is opened on behalf of the consignor for all transactions related to the consignment by debiting expenses and shipping or depositing the proceeds of sale by the consignor. Second, receipt of consigned goods is recorded memorially by the consignee. Next, from the previous example of PTX and PTZ, the journals that arise to record the transaction are: first, delivery of 10 mobile phones for sale. In consignment's book, 20% commission from sales and all expenses will be reimbursed, and in consignee book, the commission will be given 20% of the sales proceeds and all related costs will be paid by the consignor. Second, payment of shipping costs by the consignor. In consignor's book, the journal is shipping costs in debit and cash in credit, and in consignee's book, there is no journal. Third, payment of cost when receiving the cell phone by the consignee. In consignor's book, the journal is no journals, and in consignee's book, the journal is PTX in debit and cash in credit. Fourth, sales of 10 cell phone by consignee. In consignor book, there is no journals, and in consignee's book, the journal are cash in debit and sales in credit, and after that, purchase in debit and PTX in credit. Reporting and sending money from sales by consignees to consignor. In consignor's book, the journal are cash debit, unloading cost debit, and commission fee in debit, and then the credit is sales. In consignee's book, the journal is PTX in debit and cash in credit. So, that is my explanation about accounting consignment sales. Thank you for your attention. Assalamualaikum warahmatullahi wabarakatuh.